Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It is a Tuesday here in Dallas, and it's really hot. It's really hot out there. Amazing. Let's see if we, oh, wait a minute. That didn't work. I tell you, I'm having more trouble getting onto TikTok these days. It's interesting. I just doesn't seem to. Yeah, let's cancel that and just get back here. Goodness gracious. Okay, I'm almost on TikTok. I had some issues. Sometimes when you don't just do it absolutely right, it just gives you fits and starts. Hopefully that'll work. Yeah, come on. Nope. No, let's start over. Okay. There we go. Live. Okay. Ay, ay, ay. Sorry to have to go through this every time. This interface is not, unfortunately, very good for TikTok, but I have so many viewers on TikTok, it's kind of important that I got it. There we go. Okay, so now we're on TikTok. Thanks for holding on here. It's Tuesday, and thanks everyone for holding on while I did the technical stuff on TikTok. It's Dallas Trading Floor, of course. And the show number 333. And interestingly enough, just want to show you this. We have the new. I think I can see it. Show the new mug for the Dallas Trading Floor mug. So everybody that ordered one, we're going to be sending them out as soon as we can. Probably tomorrow we'll be getting those mugs out, and that'll be a good thing. So I'm hoping to get everything kind of on rails there. So hopefully that will, hopefully that'll work out, and you'll be receiving them shortly. So let's get into the slides here. Just really don't have a whole lot in terms of the slides today. And by the way, if you're looking on TikTok, super easy to take a look at what I'm showing on the green screen. Actually, it's orange here, but it's green on YouTube. Just go to my profile, click the link, and go through, and then scroll all the way down, and then you'll be able to see the live show on YouTube. The we're off a little bit today on the Nasdaq. We're down just a little over 1/4%, not a whole lot. Down on the S&P 2 and the Dow Jones, volume's up a little bit, which is good. It's up about 10%. That's good. I did buy a stock as it was breaking out today, and I've tried this stock before. I've gotten shaken out, but hopefully this is the charm. Hopefully not 3 times the charm, the second time the charm, and that's Upwork UPWK. And the interesting thing about this stock is that it's in kind of an interesting area. The staffing area, believe it or not, is 20 out of 197 in terms of the sectors. So seems to be doing really, really well. So we'll see. Microsoft is up today. So is Apple. So both of the Dow, the big tech stocks that are in the Dow, Apple and Microsoft are up. Both are up. I'm off a little bit on CrowdStrike, down a little bit on DocuSign. About a little over 1%. We'll see if it gets some strength and moves back up. L Browns is off a little bit today, almost 2.5, a little over 2.5%. Marvell Technologies, of course, this is a chip company that I'm in right now, and of course, as I said, Microsoft. It seems like the market is gravitating to some of these very, very powerful tech stocks. Apple, in particular, it's sort of been in the doldrums, but now it's moved above about 145, and that could mean that it's going to go higher because there was some resistance there. So that's looking good. We're off a little bit on Nike. That's another Dow stock that has been doing quite well. Off a little bit on Roku too, and the energy stock that I bought yesterday. Well, I'm off 69 cents on this one, so hopefully this will bounce. Because the price of oil has been moving nicely, so we will see. We will see on that, and hopefully that will be, that will be get back to the kind of the normal thing. So let's get into the slides here. Just pulling up my copy of MarketSmith, and that's the software that I use, and it is a very good piece of software because it includes about 90%, 95% of what professional hedge funds use. So it's a very good. It served me very, very well in terms of that. So there we go. All right. So there we go. Back into that. All right. So let's get into some of the. Well, it didn't. Let's see if I can get that up. There we go. All right. So we should be up with the charts. Let's take a look. Thanks for holding here, and let's get to the first question. Dinesh, thank you. Boyd Gaming. The gaming stocks have not been doing as well as we would have liked to have seen them. Penn National is off a little bit. Unfortunately, I think the reality of the reopening is coming forward. I think there's going to be trouble in some of the airline stocks, and Boeing has been weak, and so we don't know. Basically, currently, Boyd Gaming is in a downward trend. I just kind of want to draw a trend line here. Now, this is a reversal line. What I'm doing here is I'm in the daily charts here. I'm drawing a reversal line, and when I set an alert on this, is that this is basically saying, currently the trend is downward, but when it breaks through that, that's when I want to start looking at this again. But right now, even with the relative strength of 91, which is very good, by the way, this just is not performing well. And also, earnings are in 14 days. So this is not something that we could probably move into. Checklist is good at 65, but there's a lot of things about this chart that I don't really like. It's in the leisure area though. I do like that, and that has been doing very well. But I think Boyd Gaming, it just doesn't seem to get it. Let's see if I can get a take on sort of the whole group, and this is the leisure gaming group, to see kind of what's the best one. And interestingly enough, we've got, in terms of what's trading the best, there's this thing called Golden Entertainment. I'm not familiar with this. This may be a Chinese stock. No, okay, yeah, it's in Nevada and Montana. This is one I don't know, but in terms of the group, this is probably the best. Right now, the leisure gaming area just isn't performing as well as we would like. So I think you got to be careful with Boyd right now. I don't think it's, I just don't think it's performing as well as we would kind of like to see it. So be careful with Boyd Gaming, and let me get my camera back, and So let's take a question from Fernando. Hello, thoughts on ExxonMobil? An update on Wells Fargo. Okay, well, let's take a look at ExxonMobil first. And of course, this for many years, and I still think it's true, was the largest integrated oil company in the world. Now, this is very different than the oil companies that I've been kind of featuring, and those are primarily, the ones I've been featuring are smaller. They're actually what they call E&P companies, exploration and production companies. ExxonMobil is an integrated company. They do it all. They do the they do the E&P. They refine. They retail. So they're just really big. So they're kind of not, they're not as typically as vulnerable to some of the cycles. Now, ExxonMobil was at a buy point at about 62.55. It's pulled back since then, and it looks like it's getting some support at the 50-day line. I do like this stock a lot, of course, but it's kind of a situation where I don't necessarily know if it may be just buyable. So let's kind of take a look, just do some little exploring here. It's a relative strength of 80. I'm liking that. Funds are at 28% in this, which is acceptable. I mean, considering 20%, I like to see at least 20%. Checklist is good, 77%. Now, here's the thing. This has been improving. The oil and gas integrateds have come up a lot. They're 66 out of 197, so that's looking good. This isn't I kind of want to see a little bit more strength. If I wasn't in this one right now, I would probably be a little bit careful about entering. A lot of funds are in this. 2417 funds are in this, so it's very strong in terms of that. Is it the best in the group? Well, let's take a look. I don't think it is. I think currently the best company right now in this group, the integrateds, is Williams Company, but Williams Company unfortunately does not have nearly as good of a it's probably the best in the group right now, but it's right above the buy point too. So not really necessarily the best area that you can buy in right now. The oil and gas integrateds, it's good, but I think that the E&P group, which is the different one, is probably a little bit better. So my thoughts on ExxonMobil, I would watch list it. I wouldn't probably be a buyer of ExxonMobil. I just really wouldn't. at this point. Let's take a look at Wells Fargo now. Of course, as everybody knows, Wells Fargo is coming up on earnings, and that's going to be tomorrow, basically. So we will see how this this performs. I'm going to pull up the chart here for Wells Fargo. Wells Fargo has been pulling back, and it's kind of stuck here right about 43.31. So hopefully we'll see it bounce. I'm going to be holding the spread that I put out through earnings, and I'm going to see how it does. Hopefully we'll get a little bit of a bounce here, but you never know. It may pull back, and if it does, if it pulls down, below about 41, I'm probably going to be closing the trade. Currently, the relative strength is 83 on this, and it's doing better. The money center banks are starting. They have been struggling, but I think that we may hopefully start to see the beginning of a turn here. I'm hoping that we will. It just depends on a lot of things. Checklist is decent, 66. Not great, but not terrible either. There's a lot of fund ownership in here. 25, 29 funds are in this, so it's a pretty big stock. And it is a Wells Fargo is one of the biggest money center stocks. So we're going to start to see the banks report this week, and I hope that the earnings will be fairly good. They were up last quarter. I'm kind of expecting that's where they sort of turned the corner. We will see. We'll kind of see how it's going. I'm going to be holding through, and I have a spread on this. I don't actually own the shares, but I'm going to be holding a spread on this, a bull call spread. So hopefully we'll see a little bit of a bounce on earnings. And I do think that based on last quarter's earnings, it does look like I think we're going to probably see earnings per share move up here, hopefully a little bit. But let's take a look quickly back at the at the stats to see. Banks are interesting because they really perform differently. As you can see, we did have a last quarter we did have profitability for the first time in 1, 2, 3, 4, 5, 6, 7, about 8 quarters. So I do think that some of these money center banks are going to be returning to profitability. That's my guess. And we did have a little bit of a change in the overall sales. Were down about 9%, but that is less than we had been declining in sales, but it seems like that is going to turn. So hopefully we'll see a turn on the earnings, but we'll just have to wait and see how it's going to trade. But it does look, at least from my viewpoint, it does look fairly good. All right, Wes, Matt, thank you very much. I actually bought this stock today. It's Upwork. It's UPWK, and the interesting thing about this, of course, is this is in a very good area. Actually, this area has been doing, in terms of the sectors, this has been one of the better sectors in terms of its movement. This is the commercial service staffing area. It's sector 20. It's 20th out of 197, so it's definitely in the top 20%, which is very good. As you can see, it has earnings basically in 16 days, and we can see consistent growth in terms of profitability. Last quarter, it was up 200% in terms of profits. Before that, 100% in terms of profits, and the amount of sales have also been increasing as well. So I do believe that we are going to see probably a little pop on this. We definitely saw a pop today, and that's definitely where I bought it as it was moving through this cup with handle buy point, and that buy point is right here. And I just kind of want to point that out. Let's see if I can get it to stop long enough for me to put this out for everyone. But basically, the buy point on this is right here, and let's see if I can get it to move correctly. The pivot on this one is about $61. It's currently a little bit below that. It's 60.78. So it went all the way up. It pulled back. So there definitely is some resistance at the buy point, which is about 61. But we're right below that. The volume is, we're still into the end of the day. Volume was up 300%, which is telling us that there's a lot of people interested in this stock for some reason, probably funds. And I just want to kind of take a look at the 10-minute chart here, kind of showing as it's closing, we're getting some tight action. So we should see probably and we're getting decreasing volume. By the way, when you're learning to read charts, this is a very interesting thing, and this is, of course, this is on the 10-minute chart, but when you see this decreasing volume like this, and you see this tightening pattern like this, that means it's getting ready to break out. And typically it will break to the upside when it's in this kind of position. But we shall see what will happen at the end of the day. But again, it moved up rapidly. Then there were quite a few sellers, and then it came back down into this tight pattern. So I do think it's looking fairly good. I hope that I didn't buy it too early. I am slightly below the buy zone right now, so I am a little underwater. My buy was probably a little high on this, just to be, yeah, I mean, I bought it about 63, which I think is probably a little bit too high. The buy point really is 61. So the way you want to buy this, if you're interested, and it has strength tomorrow, is you want to set a buy stop limit order at about 61 plus 10 cents, or about 61.10. That's probably going to give you a really good fill there. So, but I do think it's a good stock, and I do think that it is coming into its own once again. All right, question from TikTok. Thank you very much for watching, by the way, on TikTok. SPCE, Virgin Galactic, and of course this is the Richard Branson stock, where Richard Branson, basically blasted off, and he came back, came back all in one piece. So that's a good thing. But unfortunately, the stock also blasted off, and it kind of all came down. And why? Well, I think the reason why is because of this secondary offering. They're going to offer quite a few shares. So let's see. Let's kind of look at the float here for Virgin Galactic to see if there's anywhere we can possibly do anything. So let's kind of go over here. So currently there are 240 million shares, and I do believe that they have upped the amount of shares. Now I'm not exactly sure what the amount that they're going to float on this is. So I'm going to look at the news here. Yeah, okay, blah blah blah. Okay. Virgin Galactic pillage continues. Okay, well, it's not looking good for Virgin. Okay, the fell average blah 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 blah. That's my. There we go. Okay. Interestingly enough, Virgin Galactic purge continues as AMC stock dives. So Virgin Galactic stock was continuing to plunge following Monday's brutal loss of over 17% on the big news on the share offering. It compounded its loss further by 7%. Well, as probably if anyone's watching me, you probably know that I sold on Thursday of last week, and the reason why really is because the thing about stocks like this is that when they have big news, they can move very, very violently in either direction. I typically don't like to own the physical shares when I'm moving through one of these reporting periods, and unfortunately, this is a big event for Virgin Galactic. So it did, the space launch was successful. Everyone got excited on that, and then I basically sold on Thursday. And I think that, and then, Friday and then Monday, they're both down days, and then it's down to end of day as well. I do think that we're likely to see it move possibly as low as 30, 35. We'll see. But I do think it's going to, I do think it'll strengthen up once these new shares are absorbed. The question is, how many shares are we talking about? So let's take a look. Okay, look at that. Okay, we have a lot of short interest there. That's just interesting. Let's kind of see if people are shorting Virgin Galactic. I mean, that's something I think that would be very interesting. So let me see if I can put up the screen that will allow us to see the calculator. There we go, and see kind of what the short interest is. Now, the average daily amount of shares that change hands. Wow, that's a lot. 41 million shares on the average day changes hands on Virgin Galactic. So this is absolutely one of the most traded stocks right now out there. So that's an awful lot. And so let's divide that by the total amount of float. And the float we have is 204. 700,000. So it's 204,700,000. So any one day we have 20% of the float of this stock changing hands. Now, if we look at the amount of short interest, we multiply that times the amount of days on the short interest, that's 0.7. We're going to get quite a few shares are changing hands. So this 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 stock has the potential for a short squeeze. Now I don't think that's what happened yesterday. I think what happened was basically they were going to sell a lot more shares. I think they can sell something like 50 million. So that's highly dilutive, and of course, Virgin Galactic doesn't have any doesn't have any sales to speak of. It doesn't have any profit because it really doesn't have any sales. It has deposits, but it doesn't have any sales. There are 14% funds in here. I'd like to see this a little bit higher, maybe 20%. But what I do think is going to happen is I think that we're just going to have to wait, and we're going to have to see. For right now, I don't think you can buy this stock. It's a little bit too volatile. Let's see if it goes through on a basis. Then maybe we might be able to do something. But right now, I just think at least for right now, we got to be kind of careful with Virgin Galactic. Because it is sort of behaving not as well as we'd like to see it. I just want to take a look at AMC because that was mentioned in the Investor Business Daily article, and let's kind of take a look. Yeah, there is been a sell-off here. Of course, this is the one of the king of the meme stocks. Many people are trying to hold on to this, and there's an awful lot of people that want to short this stock. Obviously, the entire movie business really is in jeopardy. I don't think the movies are going to be the same as they've been. This has a very bad. The reason this is obviously being shorted, obviously, is because the amount of the cash flow is not so good, and the number of funds that are holding it has dropped. Sales and profits have dropped, and so it's tough. I mean, and of course, a lot of these AMC locations are in malls that are dead. I mean, it's kind of an unfortunate thing. I just would be careful with this one, even though you can see a relative strength rating of 99 here. I think you just have to be super duper careful with this one. If you want to buy and hold, that's definitely something that you can do. But I do think that we will see. If the shorts win, this thing is probably going to go down and going to go down fast. So I think you've got to be a little bit careful on AMC. And so, all right. So we talk a little bit about AMC. I think that there's a lot of people holding AMC, and I think more power to the people that are holding it. I mean, it was way down there. I mean, it was literally like below $2 a share, getting ready to delist. And then it moved up. But I just don't know if you want to be holding it at this point. If you've made if you've made 80 to 1, if you've made it 8 to 1, if you've taken it from 2 to 40, just consider yourself a genius, because believe me, in a trading lifetime, there's not that many people that have done that with a stock. So, but I think that it may be coming to the end of its time. I'm not pimping for the funds at all. Believe me, I'm a retail investor. But I think that you got to be protecting your capital here, because especially if you've done well. All right. Hey, we'll be out of the country for a month on vacation. What would be the stat? All my money right now. Wow. I wish I could tell you. Wish I could tell you the exact right stock. I mean, if you've gotten me a month ago, I would have said DocuSign, but not today. Not today. There are some stocks though that seem like they're setting up pretty nicely. And I kind of want to look at some of them. Let's see. I'm trying to think what stocks are really setting up. Let me just I'm going to look at my notes here and take a quick look. Generac has been set up. It's, L Brands, XEC. Right now, that's a tough lift. I don't have an exact answer for you. But here's what you can do if you're going away in a month. You might want to consider possibly doing an index fund, like the QQQ. Well, probably the Spider. Probably the safest thing to do right now, because we're in a market uptrend, is to cash out your stock, and then you're getting ready for your vacation, and I would take look possibly putting it in, maybe in the Spider. It's down a little bit today, but this is a pretty stable stock. It's it's $435 a share. It covers the S&P 500. I do think that we are still in an uptrend, so I don't think you could get hurt too badly with this one. That's kind of my point of view. I think right now I don't really have any great stocks for you. I wish I did, because believe me, I would be in them. Um, but I'm looking at the stocks I'm looking at, and let's kind of go to my portfolio here. I'm just going to kind of bring this up and take a look. This is the small portfolio that I have for for basically my allocations, and it doesn't include all the stocks I have, but it's indicative of kind of the stocks that I'm seeing the best action on right now. Oddly enough, I mean, I started buying Microsoft here about 22 days ago. It's up 6%, which is okay. DocuSign's my top performer. Anything that I've bought recently, believe it or not, Apple, Apple and Nike. So right now, I think probably the best setup is probably on the big stocks. Is probably on Nike. Let's take a look at it. I just want to look at it right now. NKE, of course, is the symbol for Nike, and yeah, this one just kept moving up nicely. It's a little extended. I wouldn't probably buy it here. It's just a little bit extended off the base, but Nike is looking good. But I really don't have a good suggestion for you. What I would do is I would probably go to maybe not all cash, but maybe sell and then go into something like the Spider to sort of go before you go on vacation, something that you can sleep at night with. So that's kind of how I would look at it. All right, let's look at oh yeah, how does Roku look? Well, everybody knows I'm in Roku, and it didn't show on my small portfolio that I just showed you, but I've been moving into Roku aggressively, and it is just at a buy point. So let's see if I can get that up there. Roku, R-O-K-U. And of course that means 6 in Japanese. I learned that. Isn't that weird? Things you remember. This is right below a buy point. There's a buy point on Roku, cup with handle, first stage, which is the very best, at 462. Now currently it's at 427, so it's a little bit early. I started buying right as on this 10-day line. Now this is a little aggressive. I'll be honest with you. This is a little aggressive for a buy on Roku. Really, we really should wait until it moves higher. But I really like the stock, and I do think it is forming this handle, and when it does, then it will move higher. I have a half position in there. I'm looking to go into a full position, but really I need to have it move above that buy point, and before I do that, and that buy point is 462. So looking at that. So I do think that Roku is looking good. Now, here's the thing about Roku. This is going to be kind of hard. It's sort of basing. What I mean is that it's formed this long base, and typically what will happen is a stock will move up, and then it will form a base, and then as it's moving out of that base, that's a great time to buy it, because typically that is going to be where it's going to be accumulated. So Roku is, if you're buying here, this is a little aggressive. I did buy a half a position. Really, it's an early buy, and so it's a little bit more risky. But I do think that you can start accumulating Roku, but don't go in with a full position. Again, oh, by the way, just so you know what a position is, if you take your portfolio and divide it by 8, that gives you 8 pieces of pizza, right? And basically what a position is essentially one piece of pizza. Now, you don't really want to allocate any more than about 2 or 3 full positions to any one stock. Why? Because you don't want to get too concentrated. You want to see which ones are doing better, and then sell your losers and move that capital into the winners. So with Roku, I'm going to go in probably with a half position. So if I had $8,000 portfolio, full position would be $1,000, right? Because 8 divided by 8,000 divided by 8 is 1,000, right? A half position would be about $500. So I would be looking, if I had a portfolio that was worth $8,000, I would be looking basically to buy 1 share of Roku stock. That is a half position. A full position in Roku would be 2 shares. So it doesn't sound like a lot, but if you do it this way, you'll expose your portfolio to many of the best stocks as they're in the best positions and breaking out. So that's sort of how I recommend doing it in terms of getting in and out of positions. All right, let's take a look at PayPal. And you're all in. I like PayPal a lot. I really do. As you probably know, if you've watched me for a while, I do have positions in PayPal. It's basically in the buy zone. It pulled back a little bit today. It's always disappointing when they come in when they come into the buy zone and they pull back. But here's the thing about PayPal. PayPal is actionable right now. Now, after hours, it looks like it's trading up about 31 cents. Not a lot, but it's holding, and that's the key. It's holding above this buy point. So, could you add to PayPal here? Absolutely. I bought a half position basically at 292. Now I bought a little bit early, kind of like what I'm doing with Roku, but I bought a little bit early, and then it moved right into the buy zone. This is PayPal. I do think PayPal is excellent. I do think PayPal is excellent. I'm probably going to be increasing my position in PayPal because of the good chart action, and I do think you can do it at this point. I think you can initiate a position here, and I do think you can move up. So it's very, very good. All right, let's look at Bank of America, BAC, and of course this is a money center bank too. I do think that Bank of America is reporting this week. I'm going to see. No, I guess not. No, yeah, they're reporting in one day, same day as Wells Fargo. So it's going to be kind of the battle of the banks. It's going to be the battle of the banks. And again, I actually believe that we'll see it. We'll see what happens. But I do think that we will see an uptick in some of these bank stocks, just because they have started to kind of move to profitability. Now, here's the problem with Bank of America: the sales are the volume is up. I mean, in terms of the profits are up 115% last quarter. It did turn the quarter, and so that's why I'm kind of thinking we're probably going to see a fairly good. Probably going to see fairly good profits in the money center banks this week, based on that. Now, the sales are down a little bit, 10%. Now, and another thing that is kind of concerning is that Wells Fargo pulled all of its personal lines. So that's not a good thing. So we may, it may be a very mixed report. I do have this call spread on Wells Fargo. So we're going to see how that trades. That's going to basically before the open tomorrow, they're going to report earnings. They're going to report them very, very early. So we will see how that moves. Okay, what happened to Nasdaq? Interesting. Okay, let's look at the proxy for the Nasdaq. Of course, is the QQQ, and that is actually the Nasdaq 100. Let's take a look. There's just been a lot of, I guess probably the Nasdaq did die towards the end of the day. Let's see. I'm gonna go to the composite Nasdaq composite and see kind of what happened at the end of the day. There's a little bit of a downdraft right at the end. Let's look at the close. This is the last 10. This is the 10-minute chart. Yeah. Okay. It came into the close, and it's right at 14.7. So it's as long as it's above basically 1400, and that's actually down here. As long as it's above about there, I think we're doing okay on that. So this is a very choppy market. Tough to trade it right now. A lot of stuff is pushing up there towards highs, but it's just not there. So we may this potentially could be topping action. We'll see. I mean, we'll see. But right now, the thing is, the best thing to do is to look at your portfolio, start pushing those stops up pretty tight, maybe 3% below where it closed. So that might be a good idea. You may get stopped out, but you're probably gonna go. Oh, you're losing a lot. Oh, I'm sorry to hear that. Okay, so let's look at Nokia. Nokia is another meme stock, and of course, back in the day, Nokia was the coolest stock. I had a Nokia phone, of course. This is a while ago, and I thought, wow, this is so cool. I can actually text on this thing. I mean, it would be a big snore now. I mean, you would go to sleep, but I thought at the time, boy, this is the coolest thing I've ever seen. And unfortunately, Nokia is kind of stuck in the it's kind of stuck in the 80s. I mean, it did quote unquote gap up a little bit today. I mean, not a lot because it's just a cheap stock. I mean, it's got about a 514 buy point on it. It's currently at 588. It is, it's basically the same. There was a lot of buying in it, but maybe you can make money in this stock. I just don't know how to right now. It just is. It's kind of a laggard. And overall, and I'm looking at the monthly chart. You can see this just downward trend, and even though it jumped up here a little bit, I don't want to touch this one. It's just not doing the kind of things that I would want to do. Now let's kind of take a look at a stock that was a darling at one time. It's Cisco, CSCO. I think that's right. Yeah, yeah, Cisco Systems. This is probably a better bet if you want to be in this area. And I'm not so sure you want to be in this area, but if you want to be in this area, you might want to consider Cisco. It has a better chart than Nokia does. This, of course, is more expensive, but you know, the thing about the stock market is typically um, the stock market really over rewards its winners and punishes its losers. So this is kind of something that you might want to take a look at if you're interested in this area. It would be not Nokia, but Cisco, and that might be a good one. Let's look at for Mohammed. Let's take a look at Amazon. I do have a spread on Amazon. It's doing very well. It's kind of unfortunate that it is because I'm not really totally a fan of Amazon. I think they're kind of have some very some of their business practices are kind of questionable, but they sure can make money. And right now, Amazon in the weekly chart is right in the buy zone. So I'm going to click over to the daily chart. I have a spread on Amazon, and right now it is right in the buy point. There is a buy point on Amazon, basically right here, and that is basically a cup with handle, and the buy point on the pivot is 35.24. Now that's an awful lot of money per share. The spread that I did, obviously, it's not nearly that expensive because I'm using options to do it. But as you can see, very expensive stock. But I think the prospects are very good for Amazon. It's going through this basing period, and I do think it's actually headed higher, if you can believe that. So, currently it's definitely buyable at this price. It is after hours. It's up a little bit, $1.70, not a lot for this stock. I mean, it's a $3,600 stock. I think the way to play this is with options. I just think that the underlying shares are just too expensive. I mean, if you were to buy 100 shares, you would be committing $367,000, which is a lot of money. And a lot of people don't have that hanging around in their desk drawer. I mean, that's an awful lot of money. So, but Amazon does look good. It could be played with options. I did put it out for everybody. I did put out an options play on that. Let me see if I can pull that up. I don't know if everyone got that, but let's see if I can pull that up. Um, let's see. I just want to kind of just check in to see kind of where it's at in terms of that. And this is typically one of the ways I like spreads because it allows me to participate in some of the very most expensive stocks without having to buy the shares. Because what I have here is the bull call spread. I did this back a few days ago, actually. Well, it's about 10 days ago now, but let's kind of pull it up here. This is the bull call spread that I did on Amazon, and when I got in, basically the entry cost on this was $3,000. You see why this is such a good deal relative to the price of the stock, because the price of the stock, of course, is more than one share is more than the entry cost on this entire spread. And basically, I got in there basically by by basically buying the August 20th 3550 call and selling the 3600 call, and basically it was about $3,000 out of pocket. But as you can see, as we're moving up, and I think let's see if I have the price. Let's see, we're about July. I guess we're here about July. Yeah. So we're currently in. Let's see. I just have to get the what the price is. Let me just get the price here for really quickly. Yeah, 36.78. So with that, let's see if I can go back to the with 36.78. Okay, so we're right basically in here. We're just starting to see it in the green. So these spreads can be very, very nice. I'm, basically in the money here, about $320 so far. So we'll see as it moves forward. But if it just stays level, you see this will make all the money, and it will bring all the money back. So some of these spreads can be very, very good. This one, has a potential return of about $2,000. We're about we're about a tenth of the way there on this one. So that's just kind of a long and short on the spread for Amazon. All right. Boeing. Very good question. Boeing is, unfortunately, Boeing is, what is that? I've fallen and I can't get up. I think that's Boeing. I mean, I've been, during the COVID thing, I was actually shorting Boeing. I haven't shorted a stock in a long time, but I think Boeing has some serious issues. I just think Boeing has some serious issues, and right now it's fallen, and it has a relative strength line that's pointing down. I just believe that this is not. I don't think this is a stock you really want to be in right now. It's flirting with this black line here. That's the 200-day moving average. It's got a relative strength line that's pointing down. It's losing money, and it can't produce spaceships like SpaceX can. So, I mean, I wish I was more bullish on Boeing, but I just don't think it's the time to be in it. I think you need to kind of step back a little bit from Boeing and possibly, consider cutting your losses because, even though it's still holding up, I just think this could move below the 200-day line, and it could be very ugly for this. I don't think travel is going to come back nearly as fast as everyone thought it was. So that's something I think you got to be really concerned with when you're dealing with Boeing. I mean, it's a great company, but they can't execute right now. So it just seems kind of, it's kind of sad. I mean, I love Boeing. It's a great company, but I just think that it's just tough. We have a question from TikTok here about Ford. Let's look at Ford. The automobile companies are really constrained right now because of the chip shortage, as everybody knows, and they can make, if they had the chips, they could make the trucks and they could sell them. But right now they can't. As a matter of fact, the price of used cars has gone up. As a matter of fact, by the way, I have a used 1988 Chevy S10 pickup. If anyone is interested, see me offline. No, I'm going to probably sell it. It's still running. It's like 35 years old. Unbelievable, but it still works, and works really, really well actually. Here's the thing about Ford. This has just been a heartbreaker. I mean, I was in Ford, I got shaken out, and unfortunately, I just threw in the towel on this. It's pulling back. There's a 1362 buy point on this, and right now we're at 1441. So we're a little bit above that. We're technically in the buy zone, but I just think that this is such a heartbreaker. I just wouldn't be in Ford. I mean, I know it's everybody's heard of it. $14 stock. You think, gosh, how could I go wrong? But I just don't think this one. I think what we've got to wait is for Tesla to move above about 705, I think. And if it moves above that, then I think we can start looking at some of the autos again. But I just right now Ford is I just don't think it's going anywhere. I want to flip over to Tesla here. I just did that. Again, Tesla's pulled right back to the 10-day line. It's flirting with. It really just seems like it can't get above about 680, and that seems to be a ceiling for it. So, as Tesla goes, the rest of the automobile industry goes, at least for now. So, I think right now the autos just are not doing, are just not doing as well. Interestingly enough, I have somebody that is, they want to go live with me. Oh, well. What's your YouTube? Okay, the YouTube is right here. It's www.youtube.com/Dallas Trading Floor. And if you want to see that directly, super easy to do. Just go to my profile, click the link, scroll on down, and you'll see the YouTube right there. So I appreciate you asking very, very much. All right, we have another question from TikTok, and that's about Coinbase. And of course, this is an IPO. And if you've been watching me for a while, you'll know that I was in this one basically for a grand total of about 30 minutes. When it IPO'd, it moved up very, very quickly, and then I employed a strategy that I really like to do. And that is, I bought it on a buy stop limit, and then immediately when I got a fill, I pushed that stop loss up, and I pushed it up super fast. I'm going to show you the chart here, and this you can see this on the feed, on the YouTube feed, but I want to kind of show you this. Right now it's not time to buy Coinbase. It's in decline, but just to show you kind of how I did, I did this. It came out of the box, and now I didn't actually get it until about right here, 400, and then I just rode it right up to the top. Now, how did I do that? Well, I used the buy stop limit order, and if you're interested in this, I'm probably going to try to put some videos out on the buy stop limit order. It's a great way to buy stocks in a very volatile market because it only buys as it moves higher. And I think that's a really great way to go. And then once you buy it, you immediately put that stop loss in and you push it up as fast as you can. And if you know the stock is going to pop up and then pull down, that can be a very, very good thing. So right now, I just wouldn't be a buyer of Coinbase. Right now we're having issues with Bitcoin, and the issues really are that the Chinese central bank is wanting to get rid of it, obviously, because they don't want their people taking money and putting it into Bitcoin. I mean, many of the wealthy in China are already taking their money out of the country. A lot of them are, not everyone, but a lot of them are. They're buying real estate, and they don't. And the Chinese central bank wants to wants to curtail that. So, something that you might want to be a little bit careful with. And Coinbase, of course, is one of the largest exchanges for that, so they're very, very tied to the price of Bitcoin. Talking about Bitcoin, let's look at the GBTC. And the GBTC is a ETF that tracks the price of Bitcoin, and they have about 4% of the world's Bitcoin. I use this as a proxy for the overall market direction for Bitcoin. Right now, unfortunately, we pulled up. We're doing great up until about the end of March. We were just making all new highs. It's looking very good. This is basically when, and if you can see it here, this is basically when Bitcoin made its all-time high of about 61,000. It's been pulling back ever since, and currently it's flirting with about 32,000. So this is a good proxy for the direction of the price of Bitcoin, and right now, unfortunately, that's down. And I think you've got to be extremely careful with Bitcoin right now. It's probably not a good time to be in it. It's time to wait to see if it will reverse. So right now, I think you got to be careful with Bitcoin. All right, let's see another question from YouTube, and this is a question from Gresh. IIPR. I'm not familiar with IIPR. Let's take a look. IIPR. And there we go. Oh, innovative. Okay, this is one of the cannabis plays. And basically what this is this is a company. They don't grow cannabis, but they lease the facilities for companies that do. So this may be one of the best ways to play in the cannabis space. Actually, the other way I think is an indirect play as well. And it's a company called the Scott's Company, and you've probably heard of them, about Scott's Miracle-Gro. Well, they're doing tremendous business in people that are wanting to cultivate marijuana, I guess. So they're doing really well too. So that's another good one to make if you want to be in the cannabis space. I wouldn't be directly in the cannabis space because it suffers from tremendous oversupply. As a matter of fact, I think everybody in the state of Oregon is growing pot and wanting to become a pot millionaire, and they're wondering why there's so much on the market. Well, anyways, if you look at innovative properties, it's in the consolidation. It's I do think it's moving very, very nicely. I think that because it's above 200, you could possibly make an argument that you could buy it at about 200. I still think it's a little extended at 208. So here's what I would do. Let's see how it trades. If it could trade all the way up to 222, then I think you might want to consider it. But I think right now, I think you got to kind of watch list it because I do think it's extended from the 10-day line. Now, what do I mean by that? Well, when a stock trades, it moves up and down on these index lines, and right now it's extended about 4% above the 10-day moving average. If you want to buy this stock, wait until it comes down to the 10-day line and then reverses off that 10-day line. And that's really kind of where you want to buy it. Now, this exact thing happened 1, 2, 3, 4 days ago. So I do believe that we may see this reverse, and if it does reverse down to the 10-day line, and currently the 10-day line is about 200, then you possibly could start a small position, maybe a half position in it. So it's not looking bad at all. It's a specialty REIT, and it's 28 out of 197. So it's in a good area of the market right now. So I definitely like the area of the market. I like the stock. I just think that, timing how to buy it is going to be critical. I kind of would want to see it pull back to the 10-day line, maybe reverse, and that's where I would buy it. So it's definitely viable, and I think that's a very, very good suggestion. II, IIPR, Innovative Industrial Properties. All right, let's look at this one. MQ to the moon. All right, what is MQ? I don't know what MQ is. I probably do, but I don't. I remember. I forgot it. Interesting. Could obviously cloud-based as a payment. Okay, so it's a payment processor. This is not looking very good actually. This is an IPO, and it's pulling back. I don't think this is a great deal. It's a credit card processor, payment processor, 116 out of 197. Let's kind of. I mean, this is not necessarily a bad area, but let's see if there's anything that's possibly better. And there's my old favorite, of course, and that's PayPal. And I own PayPal, and this is the only processor that I really, really like. So if you're looking in this area, and I think this could be a very good area, because when the economy comes roaring back to life, this area should do very well. Now, PayPal is right now in a buy zone, so that is something that you might want to consider. You can buy at this time at 301.37. PayPal is right in a buy zone, so this is definitely a buy. Now, I know that there's an attraction with lower price stocks, and I totally understand it. I mean, I used to trade that way too. But I think it's probably better, if you're interested in this area, to possibly buy fewer shares of PayPal, which is set up perfectly, than to buy something that's in a downward trend. That's my humble opinion. Let's look at Rocket Mortgage. Rocket Mortgage has a great name. I don't know if this is going to be the best area, because refinances and new origination on houses they're starting to slow. So even though there's a lot of demand out there in the market, it's just there's an affordability issue with many of the houses. I know that's true here in Dallas. As a matter of fact, my brother is selling a house, and he's done well. I mean, he got over the asking price, which is kind of amazing. No, not that really. It was in a great area, but there's not enough houses. They didn't build enough houses between 2008 and now. So, and not as many people can qualify. And the houses are, unfortunately, they're about 100,000 more than they were just a couple of years ago. So, yeah, I'm not sure that this is a great area. They have great ads, I will say that, but I don't think this is a very good chart. I know that this used to be called Quicken Loans. It's a great company. They originate a ton of loans. And their profits have been doing very, very well. I think if you're in this area, though, you want to be. There's another company out there I think is better, called Mr. Cooper. And let's see if I can get that up. COUP, I think it is. I think that's Coupa Software. COUP. I'm not sure that's. No, that's Coupa Software. What is Mr. Cooper? COOP, I think it is. Yeah. COOP. Let's take a look at Mr. Cooper. Yeah, Mr. Cooper. And I think this one is a little stronger than Rocket Mortgage. This is also based here in Dallas, interestingly enough. I always highlight those two companies, but this one is a good one. Profits were up tremendously. This is sort of a competitor to Rocket Mortgage, and I do think they handle more volume than Rocket Mortgage. So if you're interested in this particular area, the consumer loan finance area, this is one of the best performing areas. It's 13 out of 197, and Mr. Cooper, which is a company you've probably never heard of. Believe me, before I didn't even know about this company. I actually was going to do some work for them, some consulting work for them, interestingly enough, and I never heard of them. But they're a big company, and they have a lot of mortgages. And it has a very good checklist. So here's what I would say: if you're interested in this area, this might be a company that you would be interested in, called Mr. Cooper Group. And let's see if I can let's look at this group. It's always best to find out who the leaders are in a particular group. Now, in this group currently, everything is off of its high here. I guess Santander is probably the best. I have Santander Commercial, consumer as well. This is one of my holdings. This has done very well, actually. It's essentially a Mexican company that is headquartered in Dallas as well. A lot of these finance companies are headquartered in Dallas for some reason. I don't know why that is, but they are. And this is Santander USA. This is probably one of the leaders. It's one of the strongest, 94. So I think this is probably a better company than Rocket Mortgage. Now, it's not a company that you've heard of, again, but the stock is relatively affordable at $40.57. So this is one you might want to look at as well. SC is the symbol. It's called Santander Commercial, and I know that you probably haven't heard of it. They don't really advertise a lot, but believe me, if you're buying a car or something like that and you have less than perfect credit, these are the guys that will probably finance you. So Santander Commercial, that's one you might want to look at as well. I think it's going to do very, very well. It's in the consumer finance area, 13 out of 197, so very strong area. All right, let's take a look at some of the, Workhorse. Thank you very much. What happened to Kale? I see. Not so much. Let's look at Workhorse. Workhorse is WKHS. I think we're probably going to have to abandon Workhorse because it just hasn't performed. Unfortunately, it just really hasn't performed. This has been, as you can see, that this is the monthly charts all over the place. It basically, there was some hope when it was at 40, but it's declining. I just think if you're in this and you're down more than 7%, do yourself a favor, sell this one because I don't think it's coming back, at least not for a while. So it's got a relative strength of 5, which is in the basement. So this is just like this is like I don't know. This is just like it's like in baseball, the teams that never go to the never never go to the World Series. And this is one of them. So I think you got to get rid of Workhorse. I don't think it's going to be. I don't think it's coming back. My opinion. Do you think the rally is over? Well, I don't know if the rally is over. It's a very spotty rally. You see, we're topping out. We're just about the near record highs on the Nasdaq. So there is a lot of pressure. I do think that we're going to see a pullback. I would have liked to have seen actually a larger pullback because that would allow it to go higher. But I definitely think a lot of the really smart money is moving into cash right now. I'm looking at my positions and I'm thinking possibly that's the case. Even though we're in a confirmed uptrend, I think there is something afoot. So I think we do have to be a little bit more careful than we normally would be. All right. What do you? What is the buy price of AMC or GMC? Okay. Well, let's look at GameStop. The thing about these, some people have done very, very well on them. I'm probably not one to ask because I have not. I think I had GameStop. I think I had GameStop in one of the runs just for a little bit, but it's pulling back. It's at 180 right now. I think that it's probably going to. I don't think there's a good place to get into it. I really right now. I don't. If you can find a good place, more power to you. I'm just looking at the charts, and at least from the charts, I don't think GameStop is really is really working right now. It was working very well for a lot of the people that were in it early. At 28 or $29. It's working for them all day long. But I think right now, this is just not a good entry point at 180. I think it's very extended, and I think that this is kind of the ship has sailed. I think on this one, nothing wrong with it, just not the time to be in it. AMC, we talked about that a little bit earlier. This is also in a decline. I just think that if you're not in this one already, I think you probably have to go and say, well, I missed that boat. I just don't think you want to be in it. Is Apple in the buy zone? That's a good question. Apple yesterday was in the buy zone. I think it may have pulled above it, but it is still, I don't think it's that extended. Let's take a look. Let's take a look on the weekly chart. Yeah, okay. Well, actually, according to the weekly chart, and I want to show you this, Apple is still in the buy zone. Absolutely, it's still in the buy zone. I think it really is. The thing about Apple chart, the weekly chart is a little bit different than the daily chart, but Apple is clearly in the buy zone, and it's still buyable at this price. And I think that I have Apple. I want to add to my position. On the daily chart, it's a little bit extended, but on the weekly chart, it's still buyable. So I think this is absolutely buyable right now, and it's probably not a bad place to buy it, to be honest. Apple is going to have once again some great profits. It seems like the profit machine. So Really, really good. And it is in the buy zone right now, so on the weekly chart. So be careful with that. Yeah, there is a difference between the weekly chart and the daily chart. Apple is clearly in the buy zone on the weekly chart, and so I think that's very good. And it's I highly recommend it. I hold Apple, and I've been accumulating it. It's quality stock. It's just a quality stock. Let's look at DocuSign. And of course, everybody knows I have a lot of DocuSign. I did sell a little bit of my DocuSign. Now, here's the thing. It's kind of like Apple in this sense that on the daily chart, it's extended above the buy zone. Okay, no, it's right below the buy zone. Okay, so it's right below on the weekly chart. It's in the buy zone. So, even though it pulled back a little bit today, let's see how it trades. I do think it's going to push higher, just because this stock has a very big ramp. I mean, uh, the profits were tremendous last quarter, up 257%. And I think they're going to put in some very, very good numbers this quarter too. Now, we don't have earnings for a while, until it's just basically until September 3rd, so we have a lot of time. So this might not be a bad time to start accumulating a position in DocuSign. And I do think DocuSign is likely to go much higher based on what I'm seeing with this. I think that coming into the September 3rd earnings date on DocuSign, I think that it's likely to go higher. So not a bad place to be buying DocuSign right now. It's not going to go up every day, but I think it's pretty solid, and I think that you'll be very pleased if you own it. We did talk about Apple, so I'm going to skip that one. And let's look at SOTO, SOTO, and SOTO. Let's see if that symbol. Oh, I'm not seeing anything on that. So I maybe got that wrong. Solo, I think. I'm sorry, Solo. Excuse me. I put Soto. SOLO. Solo. Okay, this is interesting. This is a Canadian-based company based in Vancouver that designs and manufactures electric vehicles under the Solo name. Not familiar with this one. Right now, the automobile manufacturers are dead last. They're 197 out of 197. So I think really with the automobile manufacturers, I think you just got to put it to rest here. I think we got to see a turn in Tesla before it's worth going back into any of the vehicle manufacturers. I just think it's a little bit deals, a little bit tough. So I wouldn't be in this one. Let's look at Morgan Stanley. That's MS, and of course, this is a large money center bank, and along with Wells Fargo and a few other ones, this is going to be reporting basically the day after tomorrow. So I guess Wells Fargo reports tomorrow before the bell, and then before the open, and then I think Morgan Stanley is going to report. Now, I'm kind of expecting, and maybe I'm overly ambitious here, but Morgan Stanley has good cash flow and good, in good earnings. Now, here's what I would do. I would not buy Morgan Stanley into earnings. I just don't think it's a good idea. It's better to wait for the earnings to see what happens if you're buying the shares. Now, with the spreads, and that's why I like the spreads so much, I typically will do those through an earnings period. So I typically don't own shares going into earnings because it can be disastrous if it goes the wrong way. I typically use spreads. I use either bull call spreads or bull put spreads if I'm expecting an upward motion and bear call spreads and bear put spreads if I'm expecting it to go down. Right now, I have a bear. Excuse me. I have a bull call spread on Wells Fargo because I do think that it's probably going to get a little bit of a bump. We'll see if I'm right. I could be totally wrong, but we'll see if that happens. I do think Morgan Stanley also is going to go higher, but I wouldn't buy the stock into earnings. It's just not a good plan. It's not a good plan because you can get really, really hurt if there's a negative reversal on the stock that you buy the day before earnings, because what happens is it can run right up and then it can just slam you. So be very, very careful buying any stock into earnings. Now, the options spreads are different, but that's really the thing. All right, probably have the last. Oh yeah, last person. Thank you so much. The Billionaires blog. That's great. Thank you for taking a look at my blog. Thank you for taking a look. I really appreciate it. Let's look at Square, and let's compare it to PayPal. Square has been doing fabulously. but I don't think it's as good a company, to be honest. It's currently in a consolidation range, which is good. But here's the thing: PayPal is in a buy zone, whereas Square is in a consolidation. Now, is that a bad thing? No, not really. I think it's a very good thing. But I'm going to draw a reversal line here, and right now, we still haven't broken the trend to the upsides. And this is very, very important. I always like to be buying a stock as it's making a new high, it's changing its trend from a downtrend to an uptrend. This is called a reversal line. So I'm really going to be watch listing Square until it moves above about 250 here. As a matter of fact, the price that I really want to see it move above before I really would consider buying it, and I'd only buy it on uptrends, would be about 260. So if it moves above about 260, then I'm possibly interested in it. Currently, it's closed at 241. So right now it's in a little bit of a downtrend. It hasn't moved to an uptrend. So I would be a little bit careful with Square. I would prefer buying PayPal for that. I'm going to show you the chart of PayPal right now. PYPL, and of course everybody knows that I definitely did buy PayPal. As you can see, the chart is a little bit better with PayPal than it is with Square. Now, of course, the stocks are pretty comparable. PayPal's a little bit more expensive, but PayPal has moved above this very, very critical buy point here, and this buy point this buy point is right below is right below 300. So it's pushed past this buy point. So now it's continuing its upward momentum. I did buy a half position at 292 right before it moved above that buy point. So I would but PayPal is still very, very actionable. So I would, if you're looking at Square and you're looking at PayPal, I consider PayPal over Square, but I wouldn't do a full position on this one. I would do a half position. Let's see how it trades. If it trades well, then go in with another half position as it moves higher. So anyways, I have come basically to the end of an hour. Thank you very much for taking a look at my channel. So appreciate it. And if you want to get on the action trade alerts, I have we do send out all the time. We send out trade alerts. We did yesterday. We did the list of highly rated stocks under $10. I normally don't recommend this, but sometimes there are stocks that are coming right out of that $10 range that can be very, very good. A few months ago, we did. This is actually last summer. We did Blink Charging as it made its move from about $9 up to $30. So there can be some gems in this under $10 list. And of course, it's available to everybody that's on the Action Trailers, and of course that's free, and you can go directly there. So the address for that that's the email address. The address for that's the YouTube address. Gosh, I've got everything but. Let's just put the right thing up. Okay, no, that's the video. I'm sorry, that's the video address. So let's see if I can get the SendFox here. Well, anyways, if I can get this right, the address for the Action Trade Alerts is www.sendfox.com/Dallas Trading Floor. And if you're looking on TikTok, it's super easy. All you have to do is go to my profile, click the link, first and last names and an email address, and you're off to the races, and you'll be on that You'll be on the Action Trade Alerts list. So until tomorrow, I will sign off for now. I'll be back at 2:30 tomorrow. I hope everyone is doing very well, and happy trading. And I will see you hopefully back here tomorrow at 2:30 Central Time.